Good evening, ladies and gentlemen. Welcome to our weekly investor forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking. We're happy to be back to bring you yet another investor update. Joining me today will be Shanice Williams, our investment advisor, and my co-host for today. Welcome, Shanice.
Thank you, Dan.
Great to have you back. Today we're discussing Tropical Battery Company Limited and Wisynco Group Limited, and we're excited to share these insights with you. As usual, if you like the content, don't forget to hit the like and share this video. And if this isn't your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this just about every week. Also, if you want to embark on your very first investment journey, you should take that first step with Mayberry, of course. Follow us on social media to learn more about how you can get started today. Well, up first, we want to touch Wisynco Group Limited, and we'll kick that over to Shanice to share us what's going on with Wisynco.
All right, so let's jump into Wisynco. Wisynco Group Limited is a Jamaican company. It forms a group with its associate company, which is JP Snacks, and also its wholly owned subsidiary, Indies Insurance. So the group's main business activities are the production, bottling, and distribution of water and beverage brands, such as Water, Bigger, Cran Water, and Boom, which we're all familiar with. They exclusively bottle and distribute for other brands as well, such as Coca-Cola, Schweppes, and Minute Maid locally here in Jamaica. In addition to the beverages, they also distribute for international food brands, such as Kellogg's, Nestle Ice Cream, Yoplait, products for trade winds, and also for their associate company, JP Snacks. And they own the Domino's franchise across Jamaica. And in addition to all this, they also manufacture a wide range of plastic and foam packing products and disposable products, which are used in the retail and food industry across Jamaica. So the company came to market in 2017. That's when they IPO'd at $7.87, and they listed on the main market of the JSE. And today it's trading at around $21 with evident room for growth, seeing the expansion that the group has started and is continuing with. So a lot more growth is expected for Wisynco, coming from the IPO price of $7.87, still at $21. We're talking about it, looking for further growth. So let's jump into the numbers. For their second quarter, which ended in December 2023, this is their 6 months numbers. So their revenue actually went up by 12% to $26.9 billion from $24 billion. Their cost of sales increased as well by 14% to $17.7 billion, up from $15.5 billion. Their selling and distribution expenses, as well as their administration expenses, both increased 13% and 14% respectively, bringing their operation profit marginally down by 1% to $3.29 billion in 2023, coming from $3.3 billion in 2022. This is really because of the expenses, the increase in the expenses, and that's due to their expansion that they've been having going on. They have increased their staff by over just about 100 new employees. So there's a lot of growth happening in this stage of the company, and it's reflecting in the numbers here. But all in all, this brought the net profit of the company still up 10% to $2.7 billion, up from $2.5 billion the prior year. And this gave them an EPS December 2023 of 74 cents compared to 67 cents the year before. Looking at their balance sheet, their total assets grew 25%, up from $27 billion in 2022 to $33.7 billion in 2023. That's for December 2023. Their liabilities also went up 43%. Also, we can account that to the expansion that they're currently doing. Went up from $6.8 billion to $9.8 billion. And their total equity also increased from $20.2 billion in December 2022 to $23.9 billion in December 2023. Now, if we look at some key statistics for the Wisynco group, you can see the current trading price, and this is data as at the 20th of February, 2024. The current trading price is at $21.01. That's trading at a PE ratio of 15.35 times, a little above the main market average that we're used to. But because of the growth that this company is experiencing and everything they have planned, I do still believe that there's a lot of potential for the stock price to grow based on everything that we're seeing. So a 15 times price for Wisynco is not something that should be a factor to not allow you to buy the stock. Their 52-week high is $23 and the 52-week low is $16. So you can see we're right at that mark. Historically, Wisynco has traded close to $30, about a little above $28. So at these prices, I don't see a problem adding it to your portfolio to get some gain. So we're looking at the quarterly numbers, the movements. You can see that there have been ups and downs. They had a great Q1 2024. The Q2 2024 compared to 2023 can be seen as flat. But as I said, their expenses tremendously grew because of the expansion and them hiring a lot more people, putting in more product lines. So we're expecting to see a lot more growth coming from Wisynco, especially over the next quarter. We're approaching Carnival. We're about to have all these parties. You're going to be drinking your Red Bull and your rum, your boom and your rum. Wisynco is going to be profiting from a lot of that. When you're on the road, you have to hydrate with some water. Remember Wisynco as you're drinking all of these things. So looking at the year-to-date stock price history of Wisynco, you can see that it has been trading pretty well between the $23 and $20 band. It hit a high at the end of January 2024, where it traded up to $23, closed at $22.65, and it has been in the same trading region from that time. I guess the market sentiment is there for Wisynco. It's a very well-known company down here. They have a lot of plans. It's a very good dividend-paying company as well. They're avid dividend payers. So I believe that this is a good candidate for dollar cost averaging if you want to do that with your portfolio. Wisynco, lovely blue chip stock, well-known company. I definitely look to add this one to my portfolio. There's a continued local demand for the Wisynco products. And as such, the company started on an expansion last year, pumping billions of dollars into improving their production quality and their product lines. So they installed a new high-speed filler machine in December, and that machine was supposed to have reached its full capacity in early February, which would increase the production of their beverages by about 20%. They're expected to add 2 more additional manufacturing lines, and these are expected to be operational by April, and that should increase the overall beverage output by about 60%. So definitely a stock that I would keep on my list. If you're into dollar cost averaging, if you want to invest in a stock every month over a long period of time, I think Wisynco is an excellent candidate for that. What are your thoughts on Wisynco, Dan?
Thanks, Shanice. I couldn't agree more. It's a great company showing great growth potential, investing billions of dollars in capital expansion, increasing their capacity. We've seen 7 quarters in a row where they've done more than $1 billion profit. They actually had a little hiccup in the last quarter because of the filler machine and expansion, which impacted their production. And I think that's the main reason why we saw the gross profit margining tightening up a bit. Sales growing by 12%, but gross profit only growing by 8%. So I'm going to predict in this next quarter, we're going to see profit get up to $1.5 billion, trading earnings of $5 billion. I think the quarterly profit will get to $1.5 billion, and we'll see $6 billion of profits going forward. You talked about the carnival season coming, and when you talk about having a truck on the road, Wisynco has over 400 vehicles in their fleet, very impressive distribution capabilities. They are here to stay. It's a powerful company, a very strong balance sheet, over $5 billion in cash, growing their equity to crazy amounts. I really like this company. I like the brand. I like the management. Hard to bet against Andrew and William Mufud. They're great guys. They know how to run a company efficiently, and they are here to stay. So this is a great one for your long-term portfolio. I'll tell you a story. This is my first flip, my first ever IPO flip. I bought $5 million worth of Wisynco, sold it on the second day for a 70% profit. And I haven't bought it since, I'm going to be honest, but it's a great company for the blue chips. You look at the market cap, $80 billion in market cap. Interest rates are going to start coming down over the next 3 to 4 months. Folks are going to be looking for good stocks to buy, the large institutional investors. And it's hard to bet against Wisynco. You're going to have to get yourself some Wisynco and some NCB this year for sure. So this is definitely a recommended buy for me. I agree with you. Despite the 15 times PE, they're poised for growth. They're very well positioned, got a lot of capital. They're committed to expanding. So this is a good one for the larger FIs to buy and to hold for the long run. So I agree with you wholeheartedly. Okay, up next is Tropical Battery. Great. So looking at the first quarter results to December 2023 for Tropical Battery, and we see revenues up 25% to $800 million, gross profit up 15% to $247 million, operating profit up a whopping 41% to $99 million because of the containment of their expenses. And net, we have a profit attributable to shareholders of $64 million, a 45% increase for the quarter. Year over year. So that's great results. Great to see $809 million of sales, highest revenues ever in a single quarter. Great profitability, second highest ever profit in a quarter. And it's obvious that Tropical is growing. What we like about the brand is we see them executing on a clear expansion and diversification strategy, which includes them expanding into the U.S., creating their own subsidiary Tropical Battery US LLC, then acquiring Rose Electronics Distribution Company in California. We saw the expansion, them acquiring Kaya Energy in the DOM rep. And I like the strategy. There's a clear commitment to diversification, to playing in the renewable energy space, to playing in the battery energy storage space as well too. And so we see, whilst the old business that started back in 1950 was primarily focused around selling lead-acid batteries and car products, we now see them moving into renewable energy and battery storage and newer technologies. And it's a space that's just really poised to grow over the upcoming years. It's just a huge commitment towards integrating renewables, and battery technology is key to that. So I do like the moves they're making. I like the direction that the business is going in, and I absolutely like the results. Total assets up 13% to $2.5 billion. Business has they're very lean in terms of managing their debt. It's good to see that. So, debt to equity like 37%, debt to EBITDA at only 1.5 times. So very low on the leverage there. I'm used to seeing folks push their debt to EBITDA up to 3 times, and that's not usually an issue. They've got over $176 million cash from operations generated, which is up by 287%, so good cash being thrown out by the business. ROE of 24.9%. So the business is very profitable, giving good returns to shareholders, generating good cash, and the management is moving very strategically to diversify both geographically, by market segments, and by business lines, looking into complementary services. So it's great to see all of the moves being made here by Tropical Battery. Looking at the key stats, current share price is at $2.50. Again, this is a company that did their IPO in 2020 at $1.21, I want to say, Shanice. That's what my memory serves me well. Thereabouts, it's up over 100% since that time, and showing great potential for growth. Junior market company trading at 20 times. So again, that's a little bit rich for junior market. We expect junior market stocks to generally be at 16 times, but similar to Wisynco, because of the huge growth factor, I see no issues with this one trading at a premium. Additionally, I expect as interest rates trend down over the next 3 to 6 months, I'm going to bet in 6 months' time we're going to see junior market PEs going back in general, not from 16 times, but closer to 20 times, and the main market PE moving from about 10 times on average to 12 times. It's going to happen, folks, because people are going to be shifting their investments from fixed income as interest rates trend down back into equities. And we're seeing the results this quarter. Quite a few great results coming out, Shanice. Quite a few companies hitting it out of the park. And we see the growth taking place in the businesses, which is a reflection of what's happening in the wider economy. When we look at unemployment, which is down, when we look at GDP, which is growing, when we look at GDP to debt, which is shrinking, the country is really doing a great job of managing the macroeconomics, and the companies who are well positioned, like the Wisyncos, the Graces, charcoal batteries, etc., they're going to continue to do well. And I expect this interest rates trend down over the next 3 to 6 months. We're going to see these companies do even better. So I'm not bothered by the 20 times PE. I still think it's a great business. Still good buy at $2.50 because they're growing and growing strategically. That's what I like. Trading earnings of $163 million, a market cap of $3.2 billion. It's a nice junior market company that's been on the market for 3 years, but being very dynamic, doing a lot of great stuff. Okay, it's not all milk and honey. There are a few things I don't like. Audited results for September 2023 not yet out, so we need to see those numbers come out to give us a better appreciation to digest the acquisition of Rose Batteries, which is a huge acquisition by their own words without saying exactly what the acquisition cost was. They're suggesting it's more than 50% of the market cap of Tropical Batteries. So it's a huge acquisition, could be easily north of $10 million US. So we'd like to see the audited financial statement, guys, so we can digest what's really happening. They really ought to have been out by now, but they're promised to be out, I believe, by the 27th of February. So we look forward to seeing the audited results. But I do like the interim results that I've seen so far. Next slide shows the profitability by quarter. And again, you can see here, certainly in the last 2.5 years, this is the biggest profit they've turned in a single quarter. So good bounce back from Q4, where the profit was only $15 million, to return a profit of $64 million, which again is good growth over same time last year. Next slide, we look at how the stock price has traded over the last year or so. And again, we're seeing here where it's currently at $2.49. It's had a high of $2.70. It's had a low in the last 12 months when we looked at that original stat of $1.63. So if you got this stock at $2, which you were easily able to get over the last year, it's now at $2.50. You're up 25%. You should be feeling good. I expect the value to continue increasing over the next year or two as they execute on their growth strategies. They're carrying very low leverage from what we can see in the numbers that we've seen here. They're making good moves. We see them having partnerships with the like of Cygnus Capital to do that acquisition in the U.S. And so they're exploring creative, efficient avenues to raise capital, to grow the business, very low leverage, and that's what I like about this business. So it's definitely a recommended buy for me. I like the way they're positioned in the renewable energy space, the moves that they're making, good management team, Alexander Melville, and the rest of the family. They definitely know how to run a business. The only other slight concern I would say I have is the increasing level of related party balances at about $378 million, which is up 26%. I'd much rather to see you guys paying the dividends and not doing it that way. But, huge balance sheet, $2 billion in assets, $2.5 billion in assets. I'm not going to necessarily lose sleep over it, but I would like to see them managing their working capital a little bit more efficiently. And that related party loan, hopefully we'll see that paid off within the next 12 months and see that capital going back into increasing the business. Otherwise, no complaints. I like them in general, like the management team, like the business, like how well they're positioned. Shanice, what about you?
I had a company as well done, especially in recent times. So their new acquisition, on the heels of it, it seems to have excited the market because there was a slight spike in the price coming into February, where you can see that it ended 2023 at a low of about 185, and right now it's trading at 250. That's a nice short-term growth for the people who look for short-term gains in the market. The Rose Electronic acquisition being so heavy, more than 50% of Tropical's market cap, that's definitely going to add a significant amount to both the top and bottom lines. So shareholders, I think, are going to benefit from that acquisition and that partnership, them expanding to new markets overseas. Tropical is a good prospect for me, growth prospect, young company. They recently IPO'd, and the growth that I'm seeing for them in the short space of time is impressive. So I'm looking forward to what they have coming this year into next year.
Great. So it looks like we're aligned on both companies today. No surprises there. So folks, still not too late to get yourself some Wisynco and some tropical battery, one on the main market, very well positioned, one on the junior market, looking to be in a strong growth position, both having great management. So I think they're both good buys for you guys out there. Well, that's it for today's discussions. I'd like to thank our viewers as usual for tuning in. Your support is always appreciated. And I'd also like to thank my co-host and panelist, Shanice, for her invaluable insights. Thanks, Shanice. Great having you. Well, if you're curious about our updates on Virtual Investor Forum and other updates, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Well, folks, as usual, remember, slow and steady wins the race, and I encourage you all to keep safe. Goodbye.